The hottest investment opportunity available in the current market is cryptocurrency. One excellent motivation to invest in cryptocurrency and engage in trading with it is the rise in the value of cryptocurrencies, which can reach tens of thousands of dollars per unit. Before making a cryptocurrency investment, you must address several important issues. The pointers for buying cryptocurrency for the first time can serve as a significant support for anyone trying their hand at crypto investment for the first time. Thoughts about cryptocurrencies have been thrown into doubt by several news reports mentioning the value of cryptocurrencies as being unknown, as well as by the recently emerging legislation governing cryptocurrencies. However, we know that cryptocurrency has benefits such as financial freedom, right? But there are a lot of well-known traps as well. Here are some things that every cryptocurrency investor should be aware of before investing. 1. Understand the mechanism of buying, selling, and exchanging cryptocurrencies before investing. To move money into and out of the cryptocurrency ecosystem, find platforms that enable both deposits and withdrawals of local currency. Having a basic understanding of how to buy and sell will make the process easier when the time comes. The widespread use of cryptocurrencies for everyday transactions is still new, so being able to convert profits into local money will be essential. 2. A diversified portfolio is key to long-term success. The desire for identity politics and going all in on one token is intense in the cryptocurrency market, owing to multiple factors including die-hard believers and smooth-talking scammers. While there have been instances where half-cent tokens have skyrocketed to hundreds of dollars, the vast majority of projects give more modest gains or completely fail at the first sign of bear market circumstances. In a volatile cryptocurrency market, diversifying your portfolio to include top projects in well-known industries like DeFi, NFTs, gaming, and Layer 1 protocols is the safest course of action. Once those essentials are addressed, placing lesser wagers on potential moonshots is certainly doable, but keeping an eye on position size is essential to limiting losses. You must also pay attention to the choice of a suitable crypto wallet for your cryptocurrencies. In essence, cryptocurrencies are assets that the person holding them is considered to be the legal owner of. So, selecting a wallet that can securely store the bitcoins must also be a concern while thinking about how to buy cryptocurrency. But cryptocurrency wallets functions by putting the private keys to the cryptocurrencies on a blockchain. So, which type of wallet should you choose as a beginner? Most people would point to a cryptocurrency exchange which acts as a wallet for cryptocurrencies. DeFi solutions, on the other hand, have experienced some of the worst hacks over the past year. As a result, you should give careful considerations to selecting a cryptocurrency wallet that can easily protect your money. 3. Do your research before taking any action. To assess if a project has long-term viability and is something you would truly be interested in holding, spend some time before investing and digging further into it. Never buy something merely because a friend or acquaintance recommended it to you, especially if they promise a return or offer a risk-free experience. Run for the hills as soon as you hear those things. Cryptocurrency is fundamentally dangerous, and over the next 10 years, 95% of all tokens will be worthless. Feeling like they are losing out on a trend is one of the common mistakes made by new cryptocurrency buyers. Many cryptocurrency newbies make the error of carving into their fear of missing out only to lose everything in the process. If you don't have enough research to back up your instincts, your investments may suffer as a result. The best course of actions would be to carefully weigh your options if you have any feelings regarding a particular coin. Many unsuccessful cryptocurrencies show valuations increasing by approximately 30% over the course of a day to deceive uninformed beginners. What should one do then to purchase cryptocurrencies given all the hidden issues? The answer points to understanding the complications before they present any problems. You can avoid making any arbitrary conclusions based on the popular opinion by conducting research. Before investing your hard-earned money in a cryptocurrency, you must weigh its advantages and disadvantages. 4. Compare the roadmap with developer activity. One of the best things about open-source technology is that any user can look at the most recent developer activity to get a better idea of how a project is doing. Any project worth digging into further will also include a link to its GitHub repository, which enables access to the most recent developments being made on a project. The project may be trying to scam its way to success before pulling the rug out from under gullible bag holders if the last GitHub entry was made months ago, yet the plan indicates major releases are imminent. 5. Timing is crucial. Even with the best of intentions, the majority of cryptocurrency investing is motivated by emotions, which can result in poorly timed investments that lose value. When a token begins to move in the market, factors tend to work together to push the rally higher, luring unwary investors who can resist the fear of missing out. If it's a token you absolutely must have, try to avoid FOMO and wait for the blown off top and price consolidation. Otherwise, look for a different reliable project that has been trading sideways but has real promise. Ride this project's upward wave and reap profits when the time is right. Don't allow any worry, confusions, or doubt to make you waver from your commitment if it's a project you simply want to keep for the long run. 6. Don't invest more than you can lose. The majority of cryptocurrency tokens will eventually reach zero, as I previously said, making them inherently hazardous. So, always invest just what you can afford to lose while keeping that in mind. What's left over after paying for all of life's necessities and setting away a little more for emergencies should be used to invest in the cryptocurrency market. There is no assurance that the value you invest in a token will hold over time, and even if it does, it can usually take years to make up lost ground after a bear market begins. 7. Think about the long run. Many people become involved with cryptocurrencies with the hope of making quick money. Unfortunately, many of them fizzle out almost as swiftly since the road is littered with traps and snares intended to rob desperate people of what little money they do have. Bitcoin's journey to $50,000 took 10 years, and it was far but easy or certain. The same will be true for any token that manages to last for an extended period, with only the most informed and devoted investors earning the greatest rewards. Keep in mind the previous guidelines and broad bull-bear market cycles as you look for projects to steadily accumulate over time. These projects should have a real-world use case, a welcoming community, and a committed development staff. Pumpkitten's GameFi project on Phantom is a perfect example. The project had a small team and didn't give any VC backing or investors. But when the community began to participate after seeing the possibilities of the innovative ideas they presented, and as a result, it has become one of the Phantom's best ventures. So, having a small team isn't always a bad thing. You just need to consider its long-term potential. To better assess whether this kind of investment opportunity is useful for you, think about why you are invested in this particular investment vehicle and educate yourself on cryptocurrencies and blockchain technology. There are potentially decades of growth ahead of cryptocurrencies and the widespread adoptions of blockchain technology. Therefore, to give yourself the best chance of long-term success, remember to relax, reduce your fear, and adopt a more measured approach to investing in the cryptocurrency market. But is it a wise idea to invest in cryptocurrencies? Analysts warn investors about the erratic and volatile nature of cryptocurrencies, but some investors are willing to take the risk for the potential reward. It is indeed important to conduct a preliminary study to decide whether investing in cryptocurrency is a good choice for you. It might be difficult for investors to avoid falling victim to the hype around cryptocurrencies. In the portfolios of many institutional and retail investors, digital currencies have become increasingly popular. However, analysts haven't stopped warning investors about the erratic and unpredictable character of cryptocurrencies. But as the state of the global economy worsens, events from around the globe, such as Canadian bank accounts being seized and economic sanctions related to the ongoing conflict in Ukraine, have brought the cryptocurrency industry to the limelight. A growing number of people in the world are now frantically trying to learn more about and acquire access to crypto that offers protections from the many raging storms, whether it be for the basic desire to keep money among failing fiat currencies or finding a trustworthy mechanism to transfer value across town or borders. Since money has been changing its form for many years, cryptocurrencies represent a unique approach to digital money. With cryptocurrencies, you benefit from the decentralization, encryption, immutability, and transparency of blockchain technology. Of course, a beginner looking to purchase cryptocurrencies would research the potential returns on their purchases. Well, you already have the advantage of being the owner of a brand new, special digital asset that might increase in value significantly in the future. Also, a lot of cryptocurrency coins and tokens are made with a focus on a certain utility. Alright guys, that's all for today. If you found this video useful, please give this video a thumbs up and hit the subscribe button for more.